Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for chapter 12, the short exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And with that said, I'm just going to give the brief warning here again. You know, this chapter is about analysis, which is covered by the 5 key questions. But as far as trend percentage is concerned, but to answer those questions when you're doing the analysis, you need to be able to calculate the different ratios, and the ratios are in the chapter in the book, and then they are in that one exhibit. You know, I don't memorize the formulas for the ratios, I look them up, okay? But I do understand how those formulas work, right? And a prime example of that was the the short exercise S12-8, this last video, where, you know, remember, you're working through a word problem and you have information that's directly related to solving the problem. You have information that has nothing to do with the solving the problem, and then you have information that has to be manipulated. Okay, and it was a good example of having to work through a word problem and manipulating data based upon the concepts. If you understand the concepts, all right, then you can apply it to the situation. And that's where this all comes in that if you understand, all right, then you can watch the application aspect of it and, you know, pick it up really quick. But if you don't understand the concepts, that's a whole other thing. You have to go back and watch and pick up that understanding. Watch the videos from the Math for Business and Finance section. You've had that subject before, you know, go back to that textbook or go back to the end of the chapters, focus on decision making at the end of each chapter in the financial accounting textbook and watch those theory videos and work through those assigned homework problems to get an understanding of how that ratio works, and then you can watch through the application of it. And that exercise S12-8 was a very good example of, if you understand concepts, you can apply it to the situation. But if you don't understand the concept, you're dead in the water. All right. So 12-9 here, EPS, earnings per share, and price earnings ratio. Right, so using the information from 12-8, which we have here, a market price of $34 a share, 50,000 and 60,000 shares of common stock outstanding in 2013 and 2014, respectively. Compute the following for 2014: the earnings per share and the price earnings ratio. All right, so the earnings per share is your net income over your average number of shares outstanding, right? Common shares. For right now, in this financial accounting, you know, it is the average number of common shares. If you're in the accounting curriculum, all right, realize that this here earnings per share calculation actually ends up being 3 blackboards long. All right. In Intro to Business, you were given the formula for earnings per share as earnings, or net income, over shares, earnings per share. All right. Now, in financial accounting, you've delved a little bit deeper into this particular formula, because now we're talking about, instead of just shares, we're looking at the average number of shares. Okay. But when we get to intermediate accounting, and this is for those who are in the accounting curriculum, like I said, it's going to be 3 blackboards long, and it's not going to deal just with common shares. You have to take into consideration preferred, shares, and a whole bunch of other things. Okay, so as you progress in your education, you delve deeper into the rabbit hole. Like peeling an onion. More and more gets added layer after layer in your understanding of the particular ratio. But the reason why I'm pointing all of this out is because you're being asked about earnings per share on this level. If you're just going to take and say my earnings over my shares, all right, and you present that as an answer, whatever that is, that may be wrong because you're not taking the average. Okay, so regardless of what curriculum you're in, you need to, how can I explain this? You need to present the answers that's commensurate with your understanding of the ratio in and of itself. You can't just go and look and say, oh, earnings per share is earnings over shares. So let me take my earnings of, what do I got here for earnings? 191,400. And my shares at the end of 2014 is 60,000 shares. Okay. And if I get that answer divided by 60,000, that gives me 3.19. Okay, that answer was acceptable when you were doing intro to business. Intro to business. That was an acceptable answer for intro to business. But you're not in intro to business anymore. You're in financial accounting. Okay, so I'm just going to put this 3.19 up here. All right, just so you can see the difference. All right, is this 3.19 wrong? No, it isn't wrong when we're talking about intro to business. Okay, but it is wrong when we're talking about financial accounting. All right, so let's take a look at what it should be for financial accounting. All right, so we have our net income, all right, which is the 191.4, but now we have the average number of common shares. So my average is 50,000 plus the 60,000, and that's all divided by 2 because it's an average. So 191.4 divided by, so that's 110 divided by 2, 110,000 divided by 2, or 55,000. So 191.4 divided by 55,000 gives me a 3.48 as my earnings per share. That's the correct answer that we're looking for financial accounting. Okay. If you give this answer here of 3.19, that's wrong, right? The correct answer is 3.48. So I just want you to be aware, right, that you can have different answers for this calculation, but the answer that's most correct is the answer that is part of your level of understanding. Here, right here, is a very rudimentary, okay, understanding. Here, which is what we're looking for in financial accounting, is a deeper level of understanding. And like I said, for those, and this applies to everybody in the business curriculum. So anybody who's taking this financial accounting subject, this is the answer we're looking for. But just as an FYI, anybody who is in the accounting curriculum, when they get to intermediate accounting, okay, you're going to actually have one whole chapter. I think it's chapter 17, one whole chapter that deals only with earnings per share because of the length of that calculation. All right. So with that said, I'm going to pause the video and then erase this and then work on the price earnings ratio. Right, so let me erase this. Okay, so the PE ratio. Okay, the PE ratio is equal to the current price per share, and that's over the current EPS. Okay. Now realize that we just calculated the EPS to be 3.48, right? Right. So that's going to be in my denominator, 3.48, and my current price per share, right? They're telling us that my market price per share is $34 per share. So I have $34 per share over 3.48. I'm going to take 34 and divide it by 3.48. I end up with a PE ratio of 9.77. Okay, and that's the answer for the price to earnings ratios, 9.77. And notice that if you watch the theory videos, and I went into a little bit more of an explanation of the PE ratio and what it means, you know, it being a low number, that's something that's a stock or that's a company that investors will look at. They use the PE ratio just to help sift through the number of the stocks that are available. I mean, if you have 15,000 stocks, how do you narrow down to those few that you want to invest in? And they use the PE ratio in order to be able to do that. Why? Because the earnings per share, right, is relatively high, and the stock itself, the price of the stock is relatively low. So that gives me a low price to earnings ratio. Because the earnings are so large, the price the price of that stock itself should be much higher. Okay, and that's why the PE ratio is low. If this was 134, okay, 134 divided by 3.48, you know, my PE ratio would be like around 38.5. Now that's a much higher PE ratio, and it's a stock that I wouldn't want to look at because my earnings are disproportionate to or in more proportion to the actual price of the stock. All right, it means it's reaching that equilibrium, if you want to call it, where the earnings are reaching an equilibrium for the price of the stock that it should be at. So the higher the PE ratio, the less value there is in investing in that stock. The lower it is, the better. So at 9.77, that PE ratio is very low, meaning that earnings are much larger, and the price of that stock of 34 should be much greater in order to kind of like bring it into equilibrium for how much money that company is actually earning. Right? And so investors, you know, they look through 15,000 stocks. In order to do that, they scan through the PE ratios, and they, you know, whatever is arbitrary for them. Some, you know, if I wanted to start out at 15 and below, right? Well, if I do a scan on that price earnings ratio of 15 and below, I'd come up with, you know, let's say 350 stocks that I can look at out of the 15,000 that are out there, right? Those would be the companies that are, to me, undervalued, all right? And that would be companies that I would want to take a look at, right? So that's it for that particular question. And I'm going to do number 10 here because it's the last one. And we'll be done with the short exercises for the chapter. All right. So, dividend yield. Okay, so the dividend yield is equal to the dividends per share over the current market price per share of stock. Okay, so that's the formula, right? And what are we looking at here? All right, so in 2014, common stockholders received $6 per share in annual dividends. right? The market price per share was 24, right? So compute the dividend yield, right? So my dividend per share, right, in annual dividends is 6, right? So my dividends per share, my annual dividends, $6 per share, is 6, and that's over my current market price. So the market price per share was 24. So 6 divided by 24 is 0.25, and that's all there is to it for the dividend yield, right, for getting that number. Right, so with that said, we're done with the short exercises. Just realize that that all of these here ratios that we've gone over from S12.6 through S12.10, all of these here ratios are in support of the analysis that you do on a business. Okay, and by coming up with these ratios, we can look at those 5 key questions, right, in order to be able to determine whether, whatever it is we're doing the analysis on, whether we're deciding whether we're an outside investor, we want to invest in the business, or whether we're actually a part of the business and we want to determine if we have enough cash in order to buy specific equipment, and so on and so forth, what the financial position of the company is. So realize that the ratios are created in order to be able to do the analysis, right? You don't just create ratios just for creating a ratio's sake, okay? And remember, ratios, as they're created, are in and of themselves don't mean much to a certain extent unless you make a comparison, right? And that's where doing a vertical and a horizontal analysis comes in. Right? So when you look at your financial statements and you create the vertical and horizontal analysis, they give you percentages, all right? That gives you information, and they also give you dollar amounts, right? And then you're able to take that information and plug them into your ratios, okay? And when you plug them into your ratios, you compare them, 1 year to the next year, right? And that allows you to be able to answer the key questions when you're doing your analysis in order to make decisions from a financial perspective about the companies. Okay. All right. So with that said, this is the end of the short exercises, and I will see you in the next series of videos for the actual exercises group B. But realize that they're going to be pretty much the same as this, but practice is what you need, and if the practice being, you can say, oh, all I'm going to be doing is just the math, which is true, but realize, and that's boring and it's repetitive, but realize that if you have to understand the concept, and if you understand the concept, you apply it to that situation. How do you apply it to the situation? Well, that's the application aspect of it. And if you think that's repetitive, to a certain extent it is, but then again it isn't, and you may get problems wrong because you don't fully understand the concept. So go back over, make sure that you're going to do those exercises, and that helps build that skill set that you need for this particular chapter. Okay. So with that said, see you in the next video for the exercises group B.